Saturday, February 1st, 1:30 p.m., New York time. Welcome back, investors, to Winning Wall Street's Money. Going to cover commodities, the categories of commodities. We just finished the first month of the new year. We'll look at the higher time frames, identify top down. And if you don't know, the major categories are energy, metal, agricultural, and livestock. We'll go in that order too. Not going to cover every single commodity in those categories, but the major ones. So first, energy, dirty fossil fuels, crude oil, natural gas. Left is crude oil, the right is natural gas. 20-year chart, 20-year of history. Each candle represents a month. Top left is the past 20-year high of crude oil. And the bottom right is the low of crude oil. Big difference. Natural gas on the grid on the right. Look at that. The top left, the high of the past 20 years, and the bottom right, the low. Open up each one individually. So notice crude oil here. Current situation is on the right. We're still inside the range of last year. We haven't taken out the high or low. For those past 2 years, you notice the high of 2023, the low of 2023. Yep, we're inside that range. So the last year's range, 2024, is still inside the range of 2023. And you may not be aware of this neither. The year 2022, the low here and the high here, we're still inside that range. Outstanding. Making progress. Look at the monthly. First new month of the year, higher high, higher low. Broke above those consolidations of those several candles here. So your opinion matters. Since we just finished the first month of the year, do you expect the last month of this new year, 2025, do you expect crude oil to be higher or lower than what it just closed at? When I hover over that green candle, we closed at $73.81. What's your opinion? It matters. Do you expect this again to be higher or lower the last month of this year, 2025, from that price? And what are you basing that opinion on? Share with me. I'd like to know. Natural gas. Also impressive. All the way back here on the top left has been the high. The year 2005. Do some house maintenance here. Take my chart. Here we go. Oops. Big difference. So again, the past 2 years on the bottom right chart, look at that natural gas in a tight trading range, still below the high of 2023 and below the high of 2022. So the two energies, the two dirty fossil fuels are pretty dirt cheap, what they've been to over the last 10 years. Yeah. Very low. And certainly much more lower than the past 20 years. There's other costs that go into the price of gas at the gas station. One of them is your federal and state taxes. That's why when you travel out of state, you'll see gas higher or lower. And part of it is the embedded costs from your taxes, federal and state. Another part is the transportation fee. When you have gas, there's a process. It goes through a refinery process. And refineries are not in every state. So again, to transport it from the refinery to your local gas station has embedded costs involved. And looking here on the monthly, on the natural gas, big red candle. Did make a higher high. Closed red below the low of last month. Next commodity, metals. The major metals, gold, silver, platinum, and copper. They all have use for industrial usage, not just for jewelry. And if you're familiar with technology, if your situation awareness, what's going on, as the grid system gets built out, uses copper. Well, there's many places that are using electric vehicles, those chargers using copper. Appliances use copper. Utility lines in your house use copper. Have you seen many more new residential properties, buildings, offices, or other things I mentioned? Yeah, they use copper. Demand on copper. And gold, again, in technology. There is technology that uses gold. High-tech devices. So 20-year history here, looking at gold. Bottom left, the low of 2005. And gold this month, this year, made all-time new high, taking out the high of 2024. Yep, this month of January, outstanding. Huge impulse move up, taking out that high of last year. So I'll remove that. It's not valid anymore. Outstanding. Gold, up strong. Not just for jewelry. Technology uses it. Devices. Silver. Bottom left is the low, the top, the high, past 20 years. And look at silver. Inside candle for the month. Yep. It didn't take out the high and low of that month of December. As well, was still inside the range of last year. So identify the leadership. Gold is the leadership. Gold is stronger in demand than silver. Expect silver to likely catch up, to be breaking above the high of this year, of last year, sorry. Platinum. Top left, look at the high for the past 20 years. And here's the low. Huge consolidation. We're still inside the range of last year. We're still inside the range of 2023. We're still inside the range of 2022 and still inside the range 2021. Yep, we haven't broke above all those. Huge consolidation there. For the month, huge impulse move up, big demand, early warning sign, bullish candle. And copper, again, mentioned here's the lows all the way back then. Last year made that high for the past cycle. Not surprised. Again, I told you, huge demand. For the month, green candle, still inside the range of last year. But again, we closed above the body of that inside candle and broke above high. So higher high, higher low in copper. Nice. That's the four major metals. Go on to the next. Agricultural grains. Give you some insight. The agricultural grains, the livestock, they have embedded costs to process them. Yeah. Fossil fuels. Fossil fuels. Oil, gas. From the farming equipment that's used, from the transportation costs, the seeds, many embedded costs in these commodities of agricultural. And then you have, on top of that, situation of weather, climate changes, wars that affect commodities. War. Look at the low for the past 20 years. Look at the high. So this month, corn took out the high of last year. Nice. Move that. Some of us have been bullish corn since last year. We had that trend reversal. One might consider to be looking to trade and invest in corn on the bullish side. Lots of opportunities in several financial markets. As well as farmers are pretty much bullish on it because they're planting, investing capital and planting corn instead of other commodities, hoping they're going to have good return on investment in the next season. Corn is also used for ethanol. Again, another embedded cost in your gasoline. Well, some countries use sugarcane for their ethanol, and this nation uses more corn. And corn is what? Also used for feed for livestock and for other materials. Big demand. Rough rice, inside candle for the month. Mm-hmm. Near the lows of this huge consolidation past 3 years here. Again, this was a consolidation, breakout, trend up, consolidation, bearish stop hunt, and dump after the retest. So closing like that, corn, rough rice, potential trade out there on a break of that inside candle. Opportunities. Wheat, big demand, big usage. Look, here's the low, bottom left, and the high, the top right. Big difference. Yep. Past several years, we came off the highs. A lot of whipsaw, a lot of consolidation. More time it spends in this consolidation, building energy for the next trend. We are still inside the range of last year. So do you think accumulation is occurring here? What is accumulation? Accumulation is smart money buying. Distribution is smart money selling. What do you think is occurring here? Opportunities. And soybean oil. Wow. Look at the low for the past 20 years on the bottom left and the high. So for the month, big green candle, bullish candle, nice. Still inside the range of last year. And soybean meal. Big difference. Yep, look at this. Consolidation, trend. And this month, higher high, higher low, broke above the high of last month, but still near the lows of 2024, where again, the accumulation occurred down here. What do you think is occurring right here? Opportunities. And soybean. Yep, there's different kind of soybean. So again, the past 20 years, look at the low bottom left, the high in the top center. Past few years, we've been trending down. We had a consolidation here, accumulation, markup, accumulation. What do you expect to happen next? What is your opinion you think is happen next? Yeah, we're still inside the range of last year. Accumulation phase. And we'll go to the last. Livestock. Lots of embedded costs in this too, especially the feed. Live cattle, past 20 years. Here's the low. And this year, we made a new high. Took out the high of last year, which this prior green candle was a high. Huge move up. And I shared with this the past several years what has been happening in cattle. Part of the reason why it's been going up. Directly from the federal agencies that have oversight. Public information. First, the misinformation, you may have other people posting and sharing. Feeder cattle, just like it says, slaughtered to be used for feed. Past 20 years, yep. Also, new high, took out the high of last year. Nice. Lean hog, big difference, right? Yep. Look at the high for the past 20 years, top center and the low. Less demand. Again, as more people gain more wealth, they can afford and they choose to spend it on higher end food products. Cattle for a fine steak versus hog. So we're still inside the range hog from last year. A lot of whipsaw too the past few years. Lows green. Still inside this consolidation here. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.